Hey guys, happy Wednesday. Got a Wednesday night update video on the action in the market, and this could be the beginning of what I've been mentioning before, which is a sell wave period. I have the S&P here, and it was a big day in the market. More so for the Nasdaq. It was 80 basis points, almost 1% on the S&P, but a red day, and the indicator is starting to curl over. Let's jump over to the Nasdaq. The Nasdaq had a big day, 2%. I think it was looking like almost 3% at one point, but closed at over 2% down, and this is the first close below a bunch of those green closes, so it's going to show a sell signal. Wouldn't be considered a confirmed sell signal till below like a 20-day moving average, which is what I have here showing. So it's still too early to say that it's a confirmed bear move, but it is the beginning of what could be a bear move. And we'll know and we'll have confirmation once it breaks through those moving averages. But you want to be careful here. If you're not a experienced trader, this is going to be what could be a bear wave. So you want to have your stop losses. You want to have a plan so you don't get caught all the way down in your positions. So I would have stop losses right around the moving averages or below, so that you can avoid, if you look before in the pandemic sell-off, if you would have had stop losses, you would have been kicked out before the market fell 30%. If you get kicked out, you can always get back in, but if you get stuck and the market sells off, you can't undo that. You can't protect yourself. Let's look at some stocks. First off, let's just look at the breadth indicator, the percentage of stocks above the 200-day moving average. Very high, above 85% of stocks. Before the last major sell-off, it was 65%. So we're very high. We've got this big election gap in there. So this is a great indicator to tell us where we are in the market. Very up. You've got to be very careful, have a plan for protecting your money, basically. Tesla had a 7% sell-off. That one is still in a healthy bull market. This could be a double top situation at the 600 level on Tesla, but it won't be bearish until it takes out the 540 level. If you look at where I have the cursor, that's where the 20-day moving average is. Until we take out that 20-day, you could easily say it's still in a bull market. Everything is up. But if you're in Tesla, you want to have some plan of protection right around that 540, or even more conservatively is the 50-day moving average, so around 470. So between 540 and 470, that's where you want to have your stop losses in case Tesla wants to roll over. You don't want to be a part of that. Apple, very close to its moving averages, right around 119, 120. If it takes that out, and we're very close, you want to protect your capital. Be careful around there. There's a lot of potential downside in Apple, so you want to have stop losses in place to protect your capital. Amazon is already below its moving averages. If you don't already have stop losses, you should have already been triggered. If you're conservative, you want to have a buy stop above the current moving averages and above the current prices around 3,300. In my opinion, it looks very weak. With this price action, I would expect a bear move. If you're not in it, you can put a buy stop above in case you don't want to miss out, but you should already be worried about the action in Amazon. Already have a stop loss in, already been kicked out, or if you don't have a stop loss and you want to give it some more room, this 2,900 level is that line in the sand. You don't want to see a weakening below 2,900. That would be bad news. We would see continued selling. if we continue to take out those support levels. Facebook has this trend line that it's sitting on, and we're touching right now the 20-day moving average. You should already be concerned. You should already have a risk control plan. If you want to give it some wiggle room, this 250 level, like 255, 250 level would be a place where you could have a stop loss, but I would be concerned in the action in Facebook. If you are out and you wanted to be in, you can just put a buy stop at 300 to get pulled in. If it gets strong, you put a buy stop. You don't have to worry about where to get in. That strength will pull you in, but I would be worried about the downside right now in Facebook. Plenty of downside. 50% of this move in any of these stocks could be expected if you see continued weakness. 50% of the last whole bull wave. Google, right at the 20-day moving average. I would be concerned between where it's at now and below, right around that 1700 level. Have a plan in place to protect capital around that 1700 level. It is weakening on the indicators, RSI and volume. Netflix, also at the moving averages. I would have stop losses at the very least at the 460 level. It looks like it's going to continue to be weak, but have your buy stops, your sell stops in place if you own it, and if you want to be in it, you don't have to worry about the upside till above 525, 530. Bitcoin, it did go through the 20-day moving average, so it is confirming bearish action. I would already have been stopped out if I was in this. If more conservative stop would be around the 16,500 level to 16,000, but I would expect some bearish action in the Bitcoin, especially since it's come from the 10,000 level to the 20,000 level. A pullback would be normal and healthy, but have your stop losses in place. Same thing with Litecoin. You should already be stopped out if you're using the 20-day moving average. If not, 70 would be the next stop loss. Ethereum should already be stopped out, but the next stop loss is 490. The other thing I want to point out would be the Volatility Index. We have a green day, and it's starting to show positive action in volatility, which is bad for stocks. If you look at volatility, we had a very large day, up almost 8%. A little bit more will take out that 20-day moving average, and then who knows where it could go. If the fear comes back in the market, that will be concerning. The dollar index is correlated to that. Let me get rid of this. If right now we're getting a little bit of pause in the dollar index, but it was a green day in the market, and that could be bad for a lot of stocks. It could be bad for a lot of commodities if we see volatility and we see a higher dollar. Bonds didn't look as strong today, even though they did show some strength. There's some mixed signals in the bonds. Yeah, so that just looks coiled up. I don't think bonds are going to be seen as a safe haven based on the action, but sometimes they will spike if we do see a sell-off. So I don't see like a place to hide out other than just cash. If you get stopped out and want to be on the sidelines, you could be looking at the metals, but even those have sold off before, like silver or platinum. Platinum has been strong, but I would be careful. I would just be more conservative, especially with such a run-up in the broad market, just a run-up in all stocks. All stocks have really gone up quite a bit. There's a big move, especially in the small caps, for example. The Russell had the biggest move in the history of the index, I believe. The single month biggest move, over 20%. If you look at the last month, was a very big November from the election. So who knows how this month will close. Could be a doji setting in for the week, which would show hesitation, or worse, if we continue to see selling. I don't know what the futures are showing right now. The futures are showing more weakness. It's only 8 p.m. California West Coast time, so really hard to say how they're going to be overnight. But we do see weakness, especially in tech and the Nasdaq futures. So I would be careful. That's the update I have for you now. If you have any questions, you can always send me a message, and I'm happy to give you any free information that I can help you with. Cheers.